EU leaders have been dealt a painful slap in the face after the credit rating agency Fitch have just downgraded Greece's rating to restricted default, the second worst level on the scale. Just hours earlier, French President Nicolas Sarkozy had claimed the Greek debt crisis had been solved. It followed Athens' critical bond swap deal with private creditors that allowed the country to narrowly escape default. Well, to discuss today's developments, we're joined live now from Athens by economic analyst Nick Skrekas. Well, here we go. Another downgrade by Fitch just after Europe's finance chief said they had finally seen the lights at the end of the tunnel. What's the problem?
Well, the rating agencies have always been Greece's best friend. But quite honestly, in this case, Bill, it was completely foreseeable. The fact that collective action clauses will be triggered means that for rating agencies, under their own defined terms, it is a default. This was expected. After the swap finishes, they will upgrade Greece. It's not really a tragedy, and it doesn't very much reflect on the reality of the deal and the transaction itself.
So the downgrade won't have any tangible impact at all, then?
Absolutely none. It was fully expected, absolutely priced in, and there will be an upgrade very soon after the swap.
All right, then. Now, Sarkozy, he said that the issue there in Greece is settled. Indeed, the Greek finance minister says it's an exceptional success, this agreement, and this future bailout programme, the only way to keep the country on its feet. Is that right? Is it the right policy?
The haircut certainly is part of the right policy because it restructures Greece's debt, lowering it in a very orderly fashion. It gives Greece some breathing space. It allows us to improve the situation. It reduces the overall amount of debt by almost 100 billion, which is very helpful. And every year we'll be paying 4 to 5 billion less. Has it completely solved the Greek crisis? No, but it is a step in the right direction. It's also helped ameliorate concerns about the Eurozone generally, and it's also brought a little bit of more calm and peace to the banking sector and global financial markets. But there is still a lot to be done.
But Nick, sorry to interrupt. All this is based on Greece accepting those austerity measures and implementing those measures, and many analysts say austerity will not boost the economy, it'll ruin the economy even more.
Bill, I've been saying that myself for about 2 years. But frankly, the whole memorandum and the bailout package are more than just austerity. There's a lot of moving parts here. The haircut is the first part. Then we have structural reforms, which frankly have been needed for 40 years, and a privatisation process which hasn't really begun with any great momentum. And then the worst part of it, as you mentioned, is the tax hikes. And, of course, the cuts in wages.
So how do the Greek people then sustain these harsh austerity measures? Clearly good news for the politicians, but what about the Greek people themselves? We've got a report even today saying suicide rates are at a record level.
Bill, unemployment is skyrocketing, and a problem that we face in our economy and society here is the fact that there's been a lot of instability and a lack of visibility since about October, when political implications on the public administration kind of froze, and so did the private sector. That's why we're seeing some really horrible numbers. I think the Greek people have really reached the edge, and it's the end of the envelope for more austerity. There can't be more of that. What we really need to see here is a crackdown on tax evasion. We need a Marshall Plan to stabilise the economy and kickstart it a little bit. And we also need to attract foreign investment and start exporting our way out of this mess. I agree with you and many other analysts.
How do you attract that foreign investment when obviously confidence in the country is so low? How do you achieve all of that you're saying?
The first thing you need is a little bit of stability and visibility, in the sense that people are afraid to invest here because we may return to a drachma sometime soon, and that could mean a devastating devaluation and a loss of money. So we need some stability in the Eurozone. We need less dithering from European Union leaders, and we ourselves here have to take some responsibility and put together a medium-term economic plan so we know how to climb out of this. There is still, despite all of this, a 130 billion bailout package coming, and despite the haircut of close to 100 billion, still a shortfall of 7 billion. You don't want to make that up with taxes.
Just briefly, do you think the fact that Athens successfully convinced those investors to take part in this is a sign of some sort of optimism for the future, or are they doing it under pressure?
They're certainly doing it under pressure. There was a lot of arm twisting, but at the end of the day, it would have been worse for them if there was a calamitous default and they got absolutely nothing. There was a lot of pressure from governments, central banks, and it was in their own interest to keep some stability in the international financial system itself.
And just briefly, yesterday I noticed that market reaction hasn't been exactly enthusiastic over this. Should you read much into that?
I read certain things into it. If you look at the periphery Eurobond markets, yields are doing a lot better. So that is positive. A lot of the other markets today are taking some sort of gains that we've seen across the week. It's a bit of, buy on rumour and now sell on the fact. There are still some question marks in Greece. We don't know whether we will be heading to a drawn-out 2-month election process which could destabilise the economy. We don't know whether all of the things that we've promised to do we will implement, like the structural reforms. There are some questions still outstanding, and there is no plan at the moment to grow the economy out of this mess. But it's a good start. Okay, it's not Nick, a panacea, a good start.
All right, Nick, there you are in the heart of it all in Athens. Really good to hear your thoughts on this. Nick Skrekas, economic analyst, joining us live there.